So, on 18 January 2025 at 8:01, this tweet of Donald Trump comes in, which he launches his own meme coin. Before becoming the president, he also creates a complete website on it, due to which the price of this coin increases very fast. Due to this coin, people in the crypto world get very angry that Trump does not know anything about coins. Then this news comes in, which Trump says that he will make America the crypto capital of the world. Meaning that many people feel that if America is taking it so seriously, then crypto should be taken a little seriously. Even in between, this news also comes that on 3rd January 2025, Donald Trump signs this executive order after becoming the president. In this order, a main point is written that the US government will no longer create its own digital currency, so that it cannot track people's money. But then look at this. Donald Trump's coin goes up to $70 and comes back to $27. That is, less than half. On the other hand, Elon Musk, who was saying after Donald Trump became the president, that I will take DOS to the moon. His main DOS employee, Vivek Ramaswamy, quits the DOS, and just 2 days before making the video, a meme coin of Elon Musk is launched, which is said to have been created by Elon Musk. Now, whether he has created it or not, we do not know. Its price increases suddenly. And then this dangerous red candle straight pump and dump scenario, i.e. both Trump and Elon Musk's coins go up and come down. Now many people are saying that this is an opportunity of a lifetime. One should invest in it. According to my understanding, the market is very volatile right now and we should trade in it very carefully. Yet for many people who want to trade in it, the lesson is to start with the basics. And the basics are that this newly launched coin has no actual practical application. So what is in our hands is its technicals. How can we react in it after something happens? And we will understand the concept of these technicals from Stan Weinstein's amazing book, Secrets of Profitable Market. Okay, so the first point says that understand the overall game. Let us understand this concept by taking the example of Nifty. Let us understand that there are total 50 companies in Nifty. If they are growing on an average from 12, then it means that there will be some companies in it which will be growing at a rate higher than 12, and there will be some companies which will be growing at a rate lower than 12.5. So those who are full-time investors and want to find those companies, first of all, they see in the overall market that which sector's growth is more than Nifty, and then in that sector they see which company is a fast runner in that sector too. That is, it is growing at a higher rate. And the biggest difference between a good and an average investor is that a good investor is made by identifying these companies. There are many companies in it which are of automobile. Some companies are of energy, some are of IT, some are of pharma, some are of finance, and the biggest package is of financial services. So if the entire Nifty is growing from 12, then, and let's say that financial services are growing at 18%, then it means that now we will see the companies in this financial services which are growing faster than 18%. And we can do the same concept in crypto as well. So before we talk about the second concept, if we want to invest in crypto, then CoinSwitch is a perfect platform for this. CoinSwitch is recognized by the Financial Intelligence Unit of India and 2 crore users have shown their trust in it. In CoinSwitch, we can trade in crypto in which we have to pay the lowest fee. It has more than 350 contracts and leverage up to 25x is available. For those who are new to future trading, there is a 100% fee rebate for the first 15 days. It has a very interesting feature called Smart Invest. In this, we will invest our money. The system that investors need is whether they have proof of reserve. So the total customer holding they have is 1 rupee is worth 52 crores. And the holding of CoinSwitch in their platform is 2,514 crores. This shows the strength of their financial health. And there is an amazing offer. Coins is currently giving cashback on 1 and 0 trading fee for the first 30 days. So check out right now. I have given the link of this in the description and first comment. Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions. Okay, so in the second rule, Stan Weinstein says that never buy in a bearish market. Trend is your friend, for example. If we come to tradingview.com, we choose crypto, and after that we select total here. It means that the index of the price of all the coins available is moving exactly like Nifty. Here we have selected this moving average, which is 200 DMA. That is, every time the last 200. We have plotted it by calculating the average of days, and here we can see that dangerous red candles are being formed, which means that this is a bearish market. But it also depends because here we have selected the width of the candle as NAR. If we select the day from here, then on a daily basis it seems that the market is above 200 DMA. And this thing has been going on since November, i.e. the time around the US election, which means that the market is in a bullish trend on a daily basis. If we look at it weekly, then the long-term trend is also overall bullish. Now, does this mean that you should go and invest money in it? No, it is not like that. It is just a rule that if it is in bearish, then we do not have to invest guaranteed. But if it is, then we have to apply the rest of the logic. For example, we can see exactly the same thing here by writing total 2. Now total 2 means that these are the indexes of all the prices, out of which only Bitcoin is bullish, has been removed, and its weekly candles are also above 200 DMA, which is an OK sign. It means that we can move to the next steps, OK. So the next point says that relative strength comparison to market, as we saw in point 1, that the goal of the super investors is to find out which stock is running the most in the entire market. But how to do this in the world of crypto? For that we will have to use relative strength. For example, if we come here and see Ether versus Bitcoin, the ratio of these two, then we can see that it is in downtrending, which means that compared to Bitcoin, it was not growing exactly like our same old example that even if the entire market is in uptrend. Despite that, from such a duration, i.e. from 2024, more people would have made money in Bitcoin than Ethereum. In short, we are trying to find out the relative strength. Understand 200 DMA very, very carefully. And this rule says that any time, that is, if the graph is going below 200 DMA, then we should not have money in it. Just for the sake of example, if, according to this rule, here you had information that Donald Trump is going to win, and Donald Trump is saying that I will make America the capital of crypto. Despite that, because this price is below 200 DMA, then we should not have Bitcoin till here. According to Stan Weinstein's book, even if we have news that its price is going to increase for sure, even if it was a company. And here we also know the value that here its value has increased a lot and its earnings are going to increase. Even then we do not react to that information until the market is also not reacting. And this thing has happened to me. For example, there was a company named Netcom Pharma, for example. Here a news had come that these people are going to make a medicine by making a Revli, from which they can earn a lot of money. But if this news had come to us here, but it is known, and we are also guaranteed that they are going to earn a lot of money. Even then, we should not have its stocks till now because it is below the line of 200 DMA. But at that time, I did not follow this thing because I did not believe in the charts at all, and I sold it at almost the same price and left. But the rest of the people in my friend circle who bought it here, they also knew that its earnings are going to come here, but they bought it here, due to which they gained a lot. We can understand this from the example of real estate. Suppose you feel that the price of a house in a locality is going to increase a lot. But if we see it's 200 DMA, then it is not easily available. But just for the sake of example, if its chart is available and we invest in it at that time, then it means that we are assuming that its price is going to increase, and many such situations have been seen, that many times the company is not available on the actual price. It also performs well, but the market does not react to it, and maximum money is made when our fundamentals are also clear. That is, we also know the reason why the price is increasing, and the market is also supporting us. That is, these charts are also running according to our theory, because it is possible that we have missed some information, due to which we are thinking that the price will increase. It never increased. Now maximum people have a doubt in this that, if I buy here and I sell here, then obviously there would have been more money to be made as compared to buying here and selling here. And this is exactly true, but according to Stan Win, we will have to leave this much party if we want to increase our hit rate. Okay, so the next concept says understand sky zone. Now before understanding this concept in reality, we have to understand the resistance. For example, we talk about this situation in November 2021. Here are all the people who bought Bitcoin. After that, the price of their Bitcoin has decreased now because the price of these people is decreasing, and they are waiting for 1 month, 2 months, 3 months, 4 months, 1 year, 1.5 years, 2 years. So many of these people must have taken losses in between and left. But there must still be some people left who must be waiting that I will not sell it at a loss. at least the price should come back as much as I bought it. And that is why it has become a resistance. And we can also see here that when the price came around this price point next time, even if more people wanted to buy Bitcoin, then the old ones were selling it quickly and leaving because their mentality was that I do not want to take a loss. Now, they are not looking at the next benefit. At least the theory of supply and demand says this, but once it breaks out with high volumes, that is, its price increases, then after that, this theory says that because till date the price of Bitcoin has never been so much, then its price will keep increasing due to momentum. Otherwise, it may start falling now. Many of us think that what nonsense is this, that the price will keep on increasing. See more of the psychology of the market. It is like if someone is coming at 90 in the 10th or 90 in the 12th, then we can say that, yes, it will perform well in the future also. It should not cheat, or something else should not happen to it. So the same thing comes here in short. If any price is in this zone, then its price can increase a little quickly. Now all these 5 points that we have seen, it means that if we apply these 5 points, then we will become a winner, so it is not like that at all. These 5 concepts are only for those people who want to invest in crypto, so by applying these 5 filters, they will be in a comparative safe zone. Okay? So I hope you like this video and these 5 concepts will help you to understand these charts a little bit. Who are absolute beginners? Thank you so much.